Welcome everyone to another episode of Diversitas, a podcast at the intersection of diversity, business, and culture. Today, I am so excited because we have Mr. Peter Gibbs with us today. Mr. Gibbs is the principal of Foundation Surety and Insurance Solutions. But most importantly for our conversation, we're going to talk about his business for sure. He is the recently retired former director of the Office of Surety Guarantees of the U.S. Small Business Administration. And this is an important conversation because we oftentimes don't talk about some of the intricacies of having to do business, particularly in a federal government or state government environment, where you have to get this thing called a bond. And so we're going to talk about that today with Mr. Gibbs. Mr. Gibbs, welcome to the show.
Hey, glad to be here. And thanks for having me. I appreciate it.
We really appreciate you coming on. You and I were introduced to one another by my wife, who you were so kind to help through a situation. And then we started to learn through the conversation about all that you do and all that you've done. And we thought that you would be a great guest for us to give some really pertinent information to our audience. So thank you again.
No problem.
So you're the principal of Foundation Security and Insurance Solutions. Let's start there. What are you doing with that business, or what do you plan to do with that business?
Foundation Surety and Insurance Solutions is a surety agency, and I believe it's the only minority-owned surety agency with a national footprint. We launched on October 1 of this year, and what do we want to do? I think our mission is to, help small businesses who are having difficulties obtaining bonding in the standard bonding market. And, the fact that I'm the former director of SBA's Office of Surety Guarantees, I think that I'll be able to, communicate with small businesses and kind of decipher some of their issues and try to find solutions for what they're trying to do. There's a lot of information out there, but I think with my, what I did at SBA, I think I'm probably, I'm not trying to be arrogant, but I think that I'm in probably in the best position to try and help some of these small businesses.
So let's break it down for our audience, because I'm assuming some people, and I believe some people probably don't know about bonds, about surety bonds, payment and performance, and all this kind of stuff. So tell me, when you're talking about bonds, because people also think about like bonds that they buy, right?
Right.
So when you're talking about bonds, what are you talking about?
So I'll give you like the technical definition, and then I'll give you an example, right? Basically, what a bond is a three-party agreement between the contractor, the owner, or what we refer to as the obligee, and the insurance, the surety company, right? And at the end of the day, the bond is what's used to make sure that that project is complete, right? So my example would be if Michael Brown wanted to renovate a building, and Michael Brown does not have any experience in, picking anything about construction, but you have a budget and you want to make sure that whoever gets that project is going to complete the project, right? So you say, you know what, Gibbs Construction Company and whoever else wants to complete my project or wants to try to get the project, you have to have a bond. And what the bond says is that the company is evaluated based on the credit, the capacity, and the character of that business. So you, Michael Brown, the owner, once you award that project to someone else, to whoever is awarded the project, you know that that surety company has done some type of underwriting to make sure that your project is going to be completed, whether it's by me if I'm awarded the contract, because if I start messing up, the whole purpose of the bond is that you have the ability to call the surety company and say, hey man, Gibbs don't know what he's doing. I need someone else to complete the project. So in a nutshell, and I hope that's simplified for your audience, it just, the bond makes sure that that project is completed. And you as the owner, you know that your project is going to be completed, whether by contractor A, or contractor B.
So let's push that example forward. So
okay.
Basically, what you're talking about, first of all, is would be called a performance bond, correct?
Right. It's contract bonding. The owners would require, before you even, they would require you to get a bid bond first, right? So that you can bid on the project.
Bid on the project.
Right. And once you get the job, most of them will require you to get either just a performance bond or a payment bond. But in most cases, they're going to require you to get a payment and performance bond. Right. So not only does it cover, my ability to do the job, but it also covers if I didn't pay my subcontractors, if I didn't pay my suppliers, all of those types of entities can call the bond so that they can be paid if they weren't paid or whatever, right?
And so you with your new organization and with when you were director of the Office of Surety Guarantees, was your focus or is your focus primarily in the construction arena?
Yes. So the Office of Surety Guarantees is appropriated $6 billion annually. And I would say that the office utilizes about $2 billion out of that $6 billion, right? I don't want to get too complicated about how that stuff works, but the only awarded contracts counts against the $6 billion, right? So bid bonds are not really counted towards the $6 billion. So the office does on average about $2 billion annually, to help small businesses. The breakdown is probably about 80% construction company, but you have landscapers who have, they may have large projects that they work on. They're required to have bonds. You might have securities companies. So it's not just construction. Right. It is service and supplies, some manufacturing. What I like to tell people, it's any contract that has a requirement for a surety bond is what's, the Office of Surety Guarantees. They guarantee the bond. Yeah, whatever type of job, but specifically to your question is probably about 80% is to construction companies.
Okay, so I'm gonna dive a little deeper into the construction conversation, but I want to say that we definitely want to get back to some of these other businesses, and not only the other businesses, but the other bonds that you cover, because it's important to, there are supply bonds, for example. You would cover that as well, right? When you were at
those, so we only deal with contract bonds.
Okay.
Right? So in the surety industry, you have the contract side and you have the commercial side. I believe supply bonds really is more on the commercial side than the contract side.
Got it. So have a construction project. The construction project is you have an owner. The owner could be the federal government, could be the state government, could be anybody, but you have an owner.
Right.
The owner says, I want to develop this parcel of property that I have. I want to create a 5-story office building.
Yeah.
Right. The owner developer, gets architects and engineers. They come up with their architectural plans and engineer plans. And they say, okay, now we're ready. We have all of the scopes for all of the disciplines, all
Right.
ready to go. We put it out to bid.
Right.
When you put it out to bid, you require anybody that will bid on the project to submit a bid bond as well, right?
Right.
So you have GCs, general contractors, or CM companies, construction management companies, that will submit responses to your RFPs based upon the drawings, et cetera, and they will submit bid bonds. One of the GCs gets the project.
Right. He's awarded the contract. Yes.
Awarded the contract.
Mm-hmm.
Now, generally speaking, in the world that we live in, GCs are not going to self-perform, right? They're going to hire.
They're going to subcontract some of the work, right? Right.
Those subcontractors may also have their own bid requirements, right? I mean, you can
Right. Right.
performance bid requirements, right?
Yeah. So the GC might require, the GC will most likely require them to submit numbers, or I don't think it would be as formal as what it would be to the GC submitting the bid bond to the federal government or some owner. Right. They'll get a pool of contractors, like, hey, listen, submit a bid
for the size of the project, though. I mean, if it's a $25 million building,
it'll be more formalized. Yeah, absolutely.
Right.
Yeah.
So the GC, they're probably going to be required to obtain a payment and performance bond.
Right.
The payment part of it is for the subcontractors that the GC has retained for the project, right?
The subcontractors, suppliers.
Right.
Right.
And then the performance bond is obviously,
right.
No matter what happens, we're gonna finish this project, or the project will be finished, right?
Right.
And the bond is really, so tell me about that. So if what happens in the worst case scenario? If a GC is on a project, they have a payment and performance bond in place, and they mess up on the project, and the owner replaces them, or the owner seeks relief from the bond company. What happens in that scenario?
The worst thing that can happen is the business losing the project, right? But what happens is if the owner, if Brown, if Bowman Construction Company is the GC, and the owner is the federal government or whatever, if they call the bond, the first thing that's going to happen is some type of investigation to see, how valid this concern is, right, or whatever. So it's going to go through the process, and then you can be, there'll be some remedies discussed, and I guess if the company can't meet those remedies, then they'll probably replace the contractor to complete the job, right? But I know your audience is small business. I want to grab this opportunity and say, I want to stress a point to a lot of small businesses, right? Because the reality is businesses, and I would say especially minority businesses, there's pressure from general contractors, to say the requirements of a city, a state, or whoever, to say, if you're awarded a contract, a certain percentage has to go to, the underserved market, right? Whether it's minorities, whether it's women, whatever it is, veterans. And so there's pressure from the GC, and then the small business, the GC is probably going to link up with some small businesses, and then they're going to be, if that small business is having difficulties getting bonds, they'll probably tell them, hey, you can go under my bond, or there's a thing called subguard, or they can be in a situation where they're giving up collateral to get the bond. And what I try to tell small businesses, like, regardless of whatever the situation is, try to get your own bond as soon as possible in the lifetime of your company, so that you're in a position, to build capacity and get your own bond.
Why is it hard for smaller companies and a lot of diverse companies to get bonds in the first place?
Yeah, I mean, I think there are a lot of reasons why. I can only talk about my experience, and just a little bit about me. I worked for a company called Wise Construction in Dayton, Ohio, which was a minority-owned firm. I was their first employee. And then I worked for a larger company in New York City called LVI Group. And if you're not disciplined as a small business to grow responsibly, what does that mean? It doesn't, because when you say grow to a small business, you're really talking about, well, I'm gonna go from $10 to $100, right? When I use that phrase, I say grow, going after the right size jobs, grow, making sure that you have the right people in the right positions, like accountants and estimators and all those things, to help you, who are true professionals, to get you to the next level. And many small businesses, they suffer because if you want to categorize the reason, is because they have a back office that is not really supportive to the growth of the company, right? So
there hasn't been enough reinvestment,
right?
To create the foundation for the capacity that you need to be able to grow, right?
Yeah, and I like the way you use that word foundation, because that's why I named my company Foundation.
Right? See, I was trying to help you out. There you go.
Because I want to help companies, because when you're building a house, you're building whatever you're doing, I don't care if it's family, the foundation is extremely important, right? So I want to help small businesses have a strong foundation, which includes many of the things that I just talked about, in hiring the right people and going after the right size job, so that they can have a business that's around for, not just for today, but for many, many years in the future.
So what strategies, let me ask it another way. What is it that smaller companies need to show to be able to get the bonds that they need, so that they can qualify to bid on these jobs that are going to help them in terms of business growth?
So I like giving examples when I talk, right?
Sure.
So I think a business has to, they have to show, they have to have a balance sheet that supports the jobs that they're going after. At the end of the day, no one's going to
give me an example of that.
So, you can't be a startup company and you haven't done any jobs, and you really have a limited money in your bank account, but you're only going after $5 million jobs, right? God bless you if you're able to get one of those jobs, but you're going to have a problem getting bonds if you get that job and you don't have no money, right? So that's why the balance sheet's got to be straight. But what I try to tell people, it's not about where, the perfect example is like, if you go after a $1 million job, or you go after 4 $250,000 jobs, right? I was educated in the Brooklyn public school system, but I think if you add 250, 250, 250, and 250, that's $1 million, right?
Last time I checked.
But the biggest problem is if you get that $1 million job and there are issues on that project, you're most likely out of business, right?
You put all your eggs in one basket.
Absolutely. But if you have those 4 jobs, you could probably have some issues on 2 of them, but you're still going to survive, right? But the bigger picture is, once you complete those jobs, in the surety industry, is they'll give you, they'll double. So if you complete that $250,000 jobs, then you can go after a 500,000. When you complete that 500,000, you can go after, $1 million. So it's not about, always going after those $1 million jobs, because it's other issues, right? And what I try to tell people, I said, tell me one of the reasons why you wouldn't want to go after larger jobs, right? And because it's never whether that small business can put up the drywall or do the electricity, right? Because we know they can do that, right?
Right.
But it's I don't think you understand the workforce requirement to get that job done. Right? And as competing for employees is really, really tough right now. And when you're starting out, you have to consistently get work for that employee to feel, confident that, hey, this new company can really help me support my family or whatever, right?
Or you have to consistently get work for that subcontractor.
Absolutely, right? Absolutely, and so it's it's the pace of the growth of building any company is extremely important. It's no different than a franchise. Someone trying to build a franchise and they start putting up restaurants all over the U.S. and they haven't really mastered, the city that they live in, right? So it's the same concept.
Right.
Grow responsibly, build relationships, build partnerships, build, a good reputation from subcontractors and workers, and then you're going to be successful.
How does the Office of Surety Guarantees help diverse firms to get bonded?
That's a very good question. So if Bowman Construction Company wanted to get, was lucky to was awarded a contract, and they went to the standard bonding market. I'm gonna use $1 million. So they get $1 million contract. The standard bonding market is going to say you have to have 10% liquid cash, right, to get that bond. If you can have $100,000 in the bank, you're going to get that bond, no issues, right? Now, if you go to SBA and you go to one of their authorized agents or a surety company that they deal with, SBA tells these businesses, our partners, these surety partners or surety agencies, listen, if Bowman Construction Company can come up with 5% working capital, $50,000, because we guarantee 80 to 90% of that bond, we're okay with that, right? So we've saved Bowman Construction Company from laying out 100,000 to 50,000, right? The other part is we also tell them if Bowman Construction Company has a business line of credit, right? And he can use the unused portion, whatever that amount is, towards that 50,000, right? So if you have a 50,000 business line of credit and you got 25,000 unused, so now your working capital just dropped to 25,000, right? So you don't have to tie up $100,000 in cash, right? And I mean, it's to me, if you're trying to grow a business, it is probably the best protection that you can get by utilizing one of our agents, because there's a lot of horror stories out there about how small businesses are being treated, the rates that they're charged. They're taking collateral from these companies. In the SBA program, collateral is not allowed.
It's a very murky world, this bond world, right? I mean, the players are, unless you're getting bonds on a regular basis, the players are not familiar to you, right? Right. Every company has, different requirements that they're looking at. My sense of it is, and I could be wrong, but my sense of it is that, a lot of it is agent driven. That to the extent that the agent is a good earner for the bond or the insurance company or whatever, they'll take a harder look at what they bring in the door as opposed to other agents or whatever, people who are maybe one-offs, etc.
Right.
Unless you are coming to the table with some level of business sophistication, it can be problematic for you as if you're going through this bond process. Am I wrong about that?
So I have a different take.
Okay, good.
Because so when you start your business, right? You say, I got to get an attorney, I got to get incorporated.
I wish they thought that.
Huh?
I wish they thought that.
I got to get a bank account, so they go to the bank and they get stuff set up, right? And I'm just amazed that if you're, you have to understand the requirements of your business, right? Yeah. So if you're a construction business, or if you're a business that requires surety bonds, just like you get that bank account, you need to go find an agent, right? Because you don't wait until you get the job to open that bank account, right? That bank account is set up within days of you forming your business. So you should get that, start developing a relationship with an agent from day one, right? Now, why is that important? Because it's, and I've seen this over and over, in my years at SBA, and it's like, Mr. Gibbs, I know I can do a $500,000 job, but the thing is, your balance sheet does not support it, right? So, but if you had a relationship with an agent, the agent would tell you, Mr. Gibbs, you should be going after jobs in the $100,000 range.
And if you want to go after the $500,000 job, this is what your balance sheet needs to look like.
Absolutely. And so it's like, in everything else in life, the sad part of many stories that I experienced at SBA is companies who work extremely hard, and then they get that one job, and the owner or the obligee tells them, you got 3 days to get a bond. I mean, it's not funny.
No, but it's true.
But it's real, right? And then a lot of these businesses, they know.
I mean, if you you read the RFP, right? So you
Right.
know, I mean, I've done a million RFPs, right? There's a checklist of stuff,
Right.
right? On that
Right.
checklist of stuff is a bond requirement.
Right.
Oh, it's coming, right?
Right.
So why don't they do it?
You know, I think our community is you know, there are, I call them, I used to say this silently up until August 31st, but I'm gonna just say it right now. There are a lot of vultures in our community, you know, and they put false hope in a lot of these companies. Just get the job and then you're gonna get the bond. You know what I'm saying? And you know, so there is this hope, you know, that if you just say that I got the job, that you're going to get the bond, but they don't understand that this stuff is about risk, you know, and you have to try to minimize, you know, for the eyes of the surety company and the agent, you got to do whatever to minimize the risk, you know, by having a strong back office and not you know, trying to, you know, eating at the smorgasbord every time you go after a job.
Right.
You know, right. just go get the salad in the beginning, you know, and once you start growing, then you go into the meat section and the fish section or whatever. So, you know, this is a very complicated, you know, arena, not because of the complexity of it, but because of all the different things that's involved in it. But my hope, you know, my objective is to be, you know, a company that, you know, that has the highest of integrity, and, you know, and we can really change, you know, especially in the underserved market, you know, people's, you know, disbelief that they can't get bonded, you know, in addition to, you know, me doing 32 years in the federal government, and I told you about the two companies I work for, you know, I'm also a retired lieutenant colonel. So I did 27 years in the Army.
Thank you for your service.
Appreciate it, as an officer. And I'm only bringing that up to say, you know, sometimes you got to have these tough conversations with people. And I feel like I'm comfortable having those tough conversations, but it's not a beat down tough conversation. It's more of a, you know, this is the reality.
This is the reality, right?
But let's talk about how we can get you to success.
Right.
What is success for you? And that's what, you know, I want the reputation, you know, once I get going, to help as many small businesses as I can.
So how do you plan to get to your natural client? Which you consider to be your natural client?
You know, we're going to be, you know, I got, you know, I have one employee. His name is Marcus Harris, and we're going to be on the grind. We're going to meet people where they are. And, you know, every organization that we could think of, we're going to be reaching out to them and try to establish like strategic partnerships. And we're going to be aggressive in reaching out to people and making sure that they know that we exist. I mean, there are many organizations out here, but you know, bonding is foreign to them. So hopefully we can get in front of people and really. So I'll mention one other thing, right? So part of being, you know, I am partnering with one of a top 10 surety company, and so we're going to have them behind us. So this it's a very reputable surety company, and I think with the marketing that they're going to be doing,
Name
with
top
what,
secret?
no, so the surety company is Merchants Bonding. They're out of Iowa,
Mhm.
and they are an exceptional surety company. Like I said, they're a top 10 surety company, and I'm very fortunate to be able to, have a relationship with them, and to have the ability to have them support, my my goal of helping as many small and emerging businesses as possible.
So we got a couple of minutes left. I did want to ask you, first of all, how did you get into this world of short bond? It's such a little category of a place to be in. So how did you get into that world?
Oh man, so the first 14 years of my career at SBA, I worked in, a lot of people don't know that SBA has a venture capital program. It's called the Small Business Investment Company Program. And companies like some of the largest companies you could think of, like Intel, Apple, America Online, Outback Steakhouse, Under Armour, many of them, so what SBA does is SBA leverages like private venture companies. So if you put up $10 million, you can get 2 or 3 tiers of leverage. So instead of having a fund with 10 million, now you got a fund with 40 million. Many of these companies come to SBA with 40, 50 million. So they go from a $50 million fund to a $200 million fund. So I was in that division, and an opportunity came about for me to, they had this program that was kind of struggling, and so they asked me to join that office, and I mean, I from my days in the construction industry was like a natural fit.
Mm-hmm.
And I, when I got there, we had about 7 surety partners. When I left in August, we had 42.
Wow.
And we went from doing like 750 billion to like 7 billion when I left.
Wow.
So, so it was a good accident. And helped a lot of people with their bonding needs. I basically revamped the entire program. We went, I think the most important thing is I changed the, federal employees have this way of, regardless of what they do, they feel like, I regulate Mr. Bowman.
Right. Yes.
Right.
Yes.
But there are only a few regulators, right? Everything else should be partnerships, right? So SBA functions because of partnerships. We don't regulate the banks, it's because of partnerships. We don't regulate venture capital companies because of partnerships. We don't regulate surety companies, it's because of partnerships. I kind of reiterated that with my team, and we just changed the whole perception of people wanting to do business with us. And it's been a tremendous turnaround. And at the end of the day, I'm hoping to do the same thing, with Foundation Surety and Insurance Solutions. I want people to know that, hey, in spite of what everyone else says out there, there's an organization that you can depend on, who who's partner, who has a great partner, and who can help you with your bonding requirements. And the limits at SBA is 6.5 million single job. If it's a federal job, you can go up to 10 million. My niche for Foundation, I want to help companies, with their initial request. It could be $100,000, but I want to foster those relationships, and then maybe 30 years later, now they're doing 5, 10 million.
Yeah.
That's what I want, and that's where foundation comes
Peter Gibbs, we greatly appreciate your time.
in. No, thanks for having me, man.
Absolutely. We are thankful for you joining us. Um, Peter Gibbs is the principal of Foundation Surety and Insurance Solutions. Thank you, sir. Take care.
Thank you.
All right.
Thank
Bye-bye.
you.
And to our audience, we are always so thankful for you to join us. And we are looking forward to having the conversation and keeping it going. Until next time, take care.